Hey Sadie, hey, have you heard of Yotta Bank? Is that a no? Do you have any idea? All right, let's find out more about it. What's up, guys? So today we are going to be talking about Yotta Savings. Now, I first heard about Yotta Savings when Graham Stephan announced that he just bought a bank. Now, he actually didn't buy the entire bank. He bought an investment into a startup called Yotta Financial, but that's neither here or there. The purpose of this video is to go through really what I did in terms of my due diligence to come to the conclusion whether or not I was going to open an account or not, and is this just a gimmick or is it actually safe? Before we go into actual Yotta Savings itself, I think it's really important to touch on just where did this concept actually come from. So back in 1956, the United Kingdom started what they call the premium bonds. Now, it's a bond that is purchased with no interest rate, but instead makes you eligible for a cash prize winnings. Those winnings is what makes up your return on your overall investment of what you put into that bond. Now, the fact that it was started back in 1956 and it's still around today, that does say something about this model. So it does work to some capacity, and other countries have tried it as well. So some of the other countries include Denmark, Ireland, Sweden, New Zealand, and there are some others as well. But the one big thing to kind of keep in mind here is the implementation of it. So there's the concept itself, but then how do they actually implement it? So an example, in the UK, the minimum bond amount investment is £25, but in New Zealand, it's $1 for every entry into that chance to win. So the way that's actually facilitated and the payouts are different amongst the different countries, which is ultimately going to impact its overall effectiveness once it is out to the public. With that said, New Zealand did announce back in August that they're going to get rid of their bond system after it's been around for around 50 years. So they started that back in 1970, and due to, or according to their public release, there are some things such as the return, the impact of the virus, and some other consideration points where they've made the decision that over the next 12 months they're going to decommission the program itself. So again, that does really put back the, what the implementation of the concept is, more so than even what the concept it is as a high level. Okay, so that takes us now into Yotta Savings. So when you go onto Yotta Savings' website, the first thing you're gonna see is the big $10 million for potential winnings. And that is something that's obviously a little bit different than all the other ways that have been implemented, where they're limiting it to around $1 million as potential winnings. Another thing that I did notice between the two is that their winnings for Yotta are given out weekly, while most of the other banks do give it out monthly. Now, this could be a big piece just because they're starting up. They want people to obviously get winnings a little bit more faster, that instant gratification, but we'll see where that changes coming down, in the coming months or years, depending on how long they last. Another thing to kind of take note is that it is a savings account. So like any other savings account in the United States, you can only pull from this 6 times per month. So if you need to move your money a little bit more than that, you might want to consider just a normal checking account. The last thing to kind of take note is Yotta Savings itself is mobile only. So you can't actually log into anything through your laptop, desktop, or whatever to access your Yotta Savings account. And the whole onboarding experience is really through the app itself. So you'll create an account, link your bank, move how much you want to move through it. It's going to ask you all the generic bank questions, including, yes, like your social security number, things like that, so that they can actually authenticate who you're going to be. And then you'll, go into the system where you can actually see the raffles and the prizes and everything else that's associated to their specific concept of how they're using that premium bond model. Now let's really take a little bit of a spotlight onto interest rates. Now, when you're looking at a lot of other savings accounts that are out there, you're going to be looking specifically for what their interest rate is associated to that account. Now, because Yotta is more focused on the prizes than it is interest rate, that's one of the big things that you're going to notice. So they do give 0.2% interest rate for any of the money that you do put in, but the big thing for them is that for every $25 that you do invest, you are getting 1 raffle ticket into the prize bucket. So that's going to offset really how that interest rate is going to be implied. So if you're looking for something that's a little bit more, I guess, secure, you can find something that has a interest rate that's being given higher for that account. Do keep in mind that those interest rates do change anyways. Versus if you go the Yotta Bank way, it's a little bit more variable in terms of like, if you win, you win. If you don't, you don't. But at the end of the day, you're not going to lose your money by kind of playing in this system. Now, because Yotta Bank is so new, the actual interest rate of return is kind of unknown. Now, there is another YouTuber called Ask Sebi. He's made around a couple of videos already on his performance in Yotta. Where it's kind of ranged anywhere from 5.8% down to as low as 1.8% on his returns, depending on what week it is. Now, one thing to kind of keep in mind is because he is creating videos all the time on this and getting affiliate codes, he's getting a lot of bonus tickets, which are going to influence overall his percentage chance of winning. Now, how can the interest rate change over time? There are a few things that can directly impact your chance of winning, which is ultimately going to then reflect what your overall interest rate is. So when you do select your actual tickets, you choose from 7 numbers. It's 6 core numbers plus 1 Yotta number. Now that 1 Yotta number is out of 1 to 63, while the normal numbers are from 1 to 70. So there's 3 things that can actually make a change to their system that will lower your chance of winning. 1, instead of choosing 7 numbers, you choose, like, let's say 8 numbers, right? Another thing is that if the normal numbers or the Yotta number, instead of it going from 1 to 70 or 1 to 63, goes to, like, let's say 1 to 100 and 1 to 100, that extra amount of numbers that you can choose from is going to reduce the chance of you selecting correctly. The last thing is right now their monthly drawings their drawings are done weekly rather than monthly. So if they do make a change to where they're following the other models that you're seeing in other countries, where they do change it to a monthly model, the chance that you can win, because the frequency has gone down, will affect your overall chance of winnings as well. Okay, so now let's talk about, is this company legit? So the first thing that you're going to see is that it is FDIC insured, and that's because of a partnership that they have with Evolve Bank and Trust. So all the money is going through Yotta and being stored in Evolve Bank and Trust, which is a company that's been around for 95 years. And you can actually call them to verify it if you want to take that extra step going forward. But in terms of where the money is it insured, is it secured? The answer is yes. Now looking at the company itself. So the 2 founders out of New York, they do have everything in terms of like what you're looking at when you're kind of going through the checklist of things, right? So both of the founders have worked in financial institutions, very large ones, Bridgewater Associates and Goldman Sachs, as well as they do both have experience in startups. So they do understand kind of the financial space as well as what it does, at least what the experience is like in a startup environment. The next kind of layer of that is, do they kind of have the Silicon Valley stamp of approval? And they kind of do. So they are a part of Y Combinators, which is one of the big incubator programs or mentorship programs in Silicon Valley, which, if you go to Y Combinator's website, you could actually see a ton of the different companies that have gone through their program, and a lot of them are pretty name brand. The last thing is really who's backing them from a financial standpoint to get this up and going. So they have a number of people that are either really big in the investment space, personal finance space, or have past startup experience and have successfully either sold, acquired, taken their company's IPO, whatever it might be, that are investing into this company because they do see some kind of viability in what they're doing overall. You could see more of this in their About Us page if you want to kind of read this a little bit more in depth, but on a high level, they do hit all the check marks. So what's the kind of reservation if there is anything? So the one thing to kind of keep in mind is with any kind of company that does start, there is a chance that it can fail, right? Like any company is hard to start from the ground up, especially in spaces like financial services where there's a ton of regulation. You have the big companies that you also have to take into consideration. So it's not saying that they're not going to be successful, but it's just one thing to keep in mind is that even with an all-star team, it doesn't guarantee success. Okay, so the last piece really is, did I end up opening a Yotta Savings account? So I did decide to open a Yotta Savings account. That's mostly just out of sheer curiosity and the fact that it is FDIC insured, so even if the company does go under, my money's still safe. It's not going to make a difference to me overall. And the concept's really interesting, right? So I'm not someone that is really big on gambling itself, but if I can gamble and not actually lose whatever I'm putting into that gambling system, then I don't really see that there's a really big downside. There's more of an upside to the potential of even being involved in this. And so that's kind of the big drivers right there. Is it's safe and the concept's kind of fun and there's really low risk that's associated to it. So I did create an account. I do have my affiliate code below if you want an extra 100 bonus tickets when you do sign up. If you do decide to sign up, what my performance has been in this account so far. I've been into it for around 2 weeks. My balance is around 50. So let's see, I put in $25 initially because that was the minimum amount to get one ticket. And in 2 weeks time, my balance is now $25.91, 92, something like that. So that's not too bad considering that's only been there for 2 weeks. And if you were to compare, if I put that $25 into a standard account where the average is like 0.01%, I would have probably still not even gotten a penny yet. So I am seeing some winnings, which is kind of cool. We'll see where this goes down the line. But thank you for stopping by, and I will see you on the next one.